Welcome to Business and Personal Travel. You know, I hear from accountants all the time that it's difficult to discuss things like this with their clients, especially to get them excited about the possibilities in doing tax planning. For that reason, I'm going to explain these strategies just how I'd explain it to my clients to give you some ideas. The bottom line is be honest, be energetic, and be excited about the tax savings, and they will be too. Do your clients ever ask you, if my trip is primarily for vacation and an opportunity comes up to talk business, can I convert my trip to business and write it off? Well, the simple answer is no. You have to have a pre-existing intent, which means pre-existing appointments before you go on the trip. You can take advantage of opportunities to talk business, but unless they're prearranged before travel, your travel expenses are not deductible. What I like to say to clients instead is how we can make this deductible. So to better understand this, we have to first understand that there are two elements of travel. The first is transportation expenses, and the second is on-the-road expenses. So let me tell you about both. The transportation is the physical cost of getting to and from your destination. Now, I'm going to dive more into that in a minute. Let's talk about when you're on the road. Every day that you're traveling for business, you can deduct 100% of your lodging, 100% of your laundry and dry cleaning, and 50% of your food, breakfast, lunch, and dinner. Now, did you notice that I said 50% of your food? That rule has recently changed, and the government had allowed us a 100% deduction for meals, but it was just present for 2021 and 2022. It's now reverted back to 50%. Now, what is interesting is a lot of people ask me all the time if they can deduct eating out alone. Now, I'm not sure what they mean. I don't know if they just like talking to themselves or what. Eating out alone is never deductible unless you're on business travel. If you qualify as being on business travel, then you can deduct the cost of eating out alone. So when are you on business travel? You're on business travel whenever you are sleeping away from home overnight and further away than 50 miles from home. If you're not away overnight, whether it be a seminar or a business convention, a meeting or whatever, you can't deduct eating out alone. Now, another question I'm sure you get a lot as well about business travel is, when do I need receipts? Do I always need a receipt? The general rule is that you don't need a receipt if the expense is under $75 per expense. Now, that's per expense, not per day. This applies to meals, cab fare, tolls while you're on business travel. Now, you do need receipts for lodging, no matter how little it costs. One other rule you should know about is called the per diem. Per diem allows you to write off a standard rate set by the government for your daily hotel expense and a separate standard rate for food each day. Now, every state and county has their own rate. Generally, you're better off keeping track of your actual expenses because they're usually far more than what the government is going to allow. So you can Google the federal per diem rates to find those charts. They are at gsa.gov website. And if you're just taking the per diem rates, you don't need to keep receipts. If you're talking about boosting that deduction, though, you really have to analyze which is better, the actual or the per diem. Now, I talked about business travel. Every day you're away from home, that day is considered business travel. So how do you prove that you actually have a business day? Does the IRS or do we have the burden of proof? We do. And it's all based on your tax log or diary. So you have to write down what you did and who you met with. You can save emails, phone logs, messages, etc. Just get your documentation all in one place. Now, the first qualification you want to ask yourself is, did you have any prior scheduled business appointments? If the answer is no, you cannot deduct the transportation expenses. If you just discuss business while on the plane or at a hotel, that will not convert a personal trip to business. you have to qualify the trip by having prior scheduled appointments. Those can be set up by email, by phone, whatever. Just set them up before you go. And if you have a prior scheduled business appointment and it's not for a convention or seminar, those are separate rules. Did the trip take you outside of the 50 United States? If you did, be careful because there are different rules and tax breaks for this. This is a good time for me to talk about the difference between compliance and planning. We're used to fielding questions like this from our clients, and it's really easy to simply say, no, that's not deductible as business travel, or yes, because you had pre-scheduled appointments, it does qualify. But if you're looking to convert these types of questions into planning opportunities, then it's really important to remember the accountant go-to answer, and that is, it depends. And so what I like to do to get clients really excited about tax planning, let's say we get a question like this, hey, if I talk business with somebody on the plane, can I now write off my personal vacation? I could say no. Or I could say, well, let's sit down and talk about that because I'd love to see you be able to have more expenses to deduct and reduce your tax bill. When is good for you? Now we can have this conversation where we can say, here's the ins and outs of how this works, and here's how much I think it can save you. You simply enter those numbers into Intuit Tax Advisor, and now you can quote the savings. Now, let's talk about the next kind of trip, and that's convention or seminar trips. Did you know there's actually two different rules? Do you have to have prior scheduled appointments for the convention? And did you pre-register? Yes. Is it outside of the North America area? What is the defined North America area? There's a whole list of these types of questions. If you're looking about whether or not it includes North America, we would be looking at Canada, Mexico, the US, and some of our trust areas in the Pacific, Puerto Rico, Guam, and so forth. Now you ask yourself, were more than 50% of the days, including travel, spent on business? And if so, now that's deductible 100% of the transportation expense to and from the business destination. The third type of trip is a U.S. business trip. So if you spend more than 50% of your days, including travel days, on business, you can deduct 100% of your transportation expenses anytime you're at a convention, seminar, or U.S. business trip. Spend more than 50% of your days, including travel, on business, and write off 100%. If they're not currently doing that, can they make some adaptations to their trips so that it can qualify? That's what's going to lower the tax bill. Now remember that travel days are business days. Every day you travel can be a business day. Now let's talk about weekends. They can be made business days as long as you follow a couple of rules. Now we don't have time to get into this today, but be sure you take advantage of it. Now, if it's a foreign trip or foreign convention, it's a little more strict. You have to follow the rules exactly. Now, remember that every day you're in transit, it counts as a business day. So if you see this description here, we've got travel to the convention on day 2, and we have travel home on day 7. Those count as full business days. Now, as for the day in the middle, what we're looking at is, did you spend more than 50% of that day for business? And if so, those all count as business days. Now, not only do they count for on-the-road expenses, but they meet the requirements that we talked about for your transportation expenses itself. Now, one last example on structuring your trip days to maximize this transportation expense deduction. We want to boost it. You have to have the business purpose be the primary purpose for your trip. And you need to have more business days than pleasure and weekend days. So remember, business days include travel days. So it is possible to work 5 days and play 4 days. Another question you might hear is, do I have to fly? I get that question a lot. And someone told me that they're nervous flyers. So the question is, can I drive and get on a boat and cruise to Hawaii? The answer is yes, you can. You're allowed to take any means of transportation that you want. That could be boat, plane, train, car, anything. And you're not just limited by direct means. Now, cruises have special treatment, but those have great tax benefits too. So make sure that you learn about it. Now, what qualifies as a business day? How do you add pleasure time into the business day so that you can turn those personal expenses into tax write-offs? So the IRS said that if you're there for a specific business presence, the entire day counts as a bona fide business day. There's no time constraints. Let me give you an example. Let's say that you live on the East Coast. And we see this all the time. There's workers that work in different states from where they live, and you travel back and forth. Sometimes you might travel to another state just to simply drop something off for about 5 minutes. And then you can go on to do pleasure. Even if it only takes you 10 minutes to do that business portion of your day, that qualifies as a tax-deductible expense. Now, if you're going to go to a convention or a seminar, the rules are a little bit different. You have to spend the majority of an 8-hour day attending the meetings. What does that mean? We'll spend 4 hours and 1 second attending your meetings. That makes the day a business day. So here's a tip. Keep a copy of the agenda and document which meetings you attended. I want to add something else here because business days are deductible. Investment conventions and seminars are not. So make sure you understand the difference between business and investment. The key is 4 hours and 1 second. Now, what if there are unforeseen delays or problems? Maybe the airplane had mechanical issues and you have to end up staying overnight. Does that still count as deductible? Yes. If you are prevented from traveling from no fault of your own, that extra day or however long it takes is deductible. Now, let's look at a few other strategies for travel for business. The first thing I want to talk about is how do you deduct travel for real estate investment property? When you own an investment property in other areas, the IRS does allow you to check on those properties as many times a year as is reasonable. Now, the key is, what is reasonable? If you can show a good reason, you can go again. So let's say you go to check on your property in June, you check on the renters, make repairs, and so on. Say your property is in Florida. In August, a hurricane is coming, and you need to go down and check on the property and help secure it. Is that a good reason? Yes, reasonable cause. So valid reasons for checking on your property include checking on the management, doing maintenance on the property, talking with the tenants to make sure that they think the management company is doing well, and so forth. Just be sure to document what you're doing in some sort of tax diary or tracker. Now, by the way, for every day that you're fixing up your property, that's considered a business day. You can fix up the property and keep it in good working order. Now, another question you probably get a lot is, can you write off days when you are consulting with colleagues in your profession? That business discussion question. Yes, the IRS allows you to write off these days. Why? Because you can learn new business skills. So when I do travel around the country, I go to different places so that I can meet with some of my mentors and people who can help me improve my skills. It also happens that they might live in a place that I want to visit for a personal vacation, and that's okay. So I can write off the whole trip except for my personal time. Now, you can meet other people to improve your skills, extend your network, and etc. The key is that the business has to be directly related to your business. If you don't already have that business, you can't write it off. Now, not all marketing works. What if you set up appointments to solicit some vendors and they cancel on you when you are there? Can you still write it off? Yes. The key is to have it pre-scheduled. What if you host a party for potential customers and prospects celebrating a major milestone in your business? Do you have to gain customers? No. You just have to talk business and try, but there's no rule on success. And the test comes in, do you have a reasonable expectation that business will occur as a result of that meeting? The key for business travel is that you have to prove to the IRS that you had business intent before, during the trip, and after. So how do you prove all of this? Let's talk a little bit about documentation. You want to keep a tax diary or calendar in real time to make sure that you're protected. Remember, there are two ways to have a business day. The first is a convention or seminar. Now, how do you prove that you actually attended the convention? Save the agenda or the brochure. Take a picture of yourself at the presentations. Save notes that you take. If you get food poisoning from the restaurant the night before and you can't attend the next day, write it down because you can still deduct that day. Now, the second way to qualify as a business day is to have a meeting or appointment pre-arranged. It has to be a bona fide business purpose related to the business. There are no time constraints on that meeting. But here's a tip for the wise. If you're going to a location that is renowned for vacations, let's say Hawaii or Orlando, for example, and you only set up one meeting a day for 5 days, that's going to look pretty smelly to the IRS. You should spend more time each day in meetings. Remember, in either scenario, you can write off a spouse if they're actively involved in the business. So check out our class on hiring your spouse. You need documentation, and a great way to have proof is to send emails. Those will have registration confirmations as well as many of your scheduled appointments with those that you want to meet with. Receipts are required for all transportation expenses, lodging, and anything over $75 for a meal purchase unless you're taking the per diem rate. Remember, there are two separate travel deduction categories: on the road expenses, which include housing, food, and laundry, and transportation expenses, which include flights, taxis, rental cars, gas, tolls, parking, etc. So in your tax diary, you should have a record of the daily expenses, the days that you travel, your destination, and most importantly, the business purpose for the trip. I hope this helps gives you some ideas on how to share this with your clients and get them eager about working with you to save tax. If you're looking for more ideas on advanced tax reduction or how to implement tax advisory services into your practice, check out the website on the next slide.